Hello, guys, and welcome back to a new episode of Exit or Die, the podcast for founders, funders, and all the people who actually build companies. Today, I have a very special guest. He just closed a massive 19 million fund focused entirely on AI-driven B2B and enterprise software at the pre-seed and seed stage. And they 3x jumped from their original target. My guest today is Alexander Kölpin, Managing Director of Seed and Speed Ventures and a key player in European early stage investing. From co-founding Berlin's unicorn workspaces to building the German startups group and investing across Europe for more than a decade, Alexander has a front row seat to how the early stage landscape is evolving. Today, we talk about why Europe can win in AI, what founders still get wrong about early stage execution, and why scaling starts way before product market fit. Alexander, welcome to Exit or Die.
Peter, thank you very much for your invitation. I've a very nice description you made there, and I really like the title of your series because that's what it is about very often. Exit or die.
Yeah, Alexander, welcome again. Yeah, the title is very clear. So that's the startup life, exit or die, especially in times what we currently have. I would say we start directly into the topic. I already mentioned 90 million fund, and your original target was 30 million. You closed it at the 90 million for that fund. But what changed? Why you target first 30 million and then you closed it at 90 million?
I mean, for us, it was the first two funds were basically financed by the Maschmeyer family. Carsten Maschmeyer founded Seed and Speed Ventures 2016, and I took over the managing director post into 18-19. And when we discussed this together, we had our two funds before, our two virtual funds, one and two. Of course, we could measure successes, but still it's a different game if you are reporting to one LP, to one family, or to several LPs like it is now. So it was basically testing the waters, see how it works. The overall fundraising climate is not as easy as it was a couple of years ago when capital needed a place to go to. Now you really have to fight. You really have to win the trust of your investors. I mean, I, as a venture capitalist, have also investors, the so-called LPs, limited partners who invest in a fund. And I, as a GP, as a general partner, invest into startups. That's basically how it works for the people who may not know this. So for us, we could show track record, obviously, of two funds. We could show that we have a trusted and experienced investment professional team at Seed and Speed Ventures. And I would say the trust we had, because we did the two funds, was crucial, but the most crucial thing was, in my opinion, that Carsten had a really great network of institutions, of people who trusted him and thus us. What really key is the same what you have in startups from the startup side when they talk to investors. You need to build relationships. You need to develop trust. If you just approach people once and asked, I would like to get X million from you, then you might get them or not. But if they can follow you, if they can see what you do over a couple of years, and then they gain trust, and then it's much easier to have a business transaction. That was something I knew, of course, subconsciously, but which I had really learned in this fundraising as well. So when we had the first yeses, how it worked, what people were asking us, they were asking us, what do you do? Why do you do it? I mean, some topics we will touch today probably. That was also a learning curve for myself in this fundraising process.
Yeah. And what do you think? Is that a signal that LPs are finally waking up to the European AI, or more about founders stepping up?
I wish I could give you a clear picture. Honestly, I have the feeling it's neither nor, because there is a certain trust that also Europeans will build sizable AI companies. Obviously, that is there. However, LPs are not waking up because there are some LPs which regularly invest into venture capital firms, and they do it and they look for the best targets and they invest. I would say some venture capital tourists are not investing in funds anymore. Some have their money, the portion they want to put into venture capital funds, really put away, and they need to get it back. And the venture fund lasts at least 10 years, as we all know. So I think the reason was really the trust building. I mean, we had a couple of announcements of funds which were announced at the beginning of the year in Germany and Central Europe. But I believe the overall number of players will not grow, will shrink, because not everybody will have the possibility to have a second, third, or fourth fund. So I don't see our success as I can't see it as an indication for a general change. What I would love to see is much more venture capital investors getting money from institutions, from not tax money. I'm not talking about tax money. I mean, there's some wishes to get tax money into the venture capital market, which is okay,
Yeah.
I guess. But I would rather have a small portion of pension funds and so on. All these opportunities which you see in the US, which are really, really difficult to do in Germany, and there would see that would change it. I'm as a venture capitalist, I ask for more money poured into funds, and not only into ours, but also in the funds of our colleagues. But I would love to see rather regulations which make it easier for private money to go there than rather take tax money, which is we need for education, building bridges, whatever. Yeah.
Yeah. And yeah, we are currently in the best time. I would say that also pension funds and other institutional companies can bet on AI and also on the European landscape, right?
No, though, I think it's a very interesting brand because you need to find your place. I mean, the whole industry is still dominated by the US, by China, which we don't really see because it's not really used in the Western world. However, I see Europe really lagging behind, and we really need to step up our game. That's definitely, that's for sure. We need it because Europe is not only important because I'm a German and I'm a European, but it's also important because it symbolizes a lot of values I want to see propagated, and I want to see. I think a strong Europe would help the whole world, and I believe we need to do a lot. It will take a lot of time. I'm not overly optimistic that we will see fast changes. However, as a venture capitalist working in Germany, Austria, Switzerland, Central Europe, there are a lot of chances we can take and a lot of good opportunities. And I'm very positive about the outcome of the startups we have invested in, of our fund, and of our colleagues. However, from the broader picture, I see a lot of difficulties we have to overcome in Germany and Europe. We really need to step up our game, to be honest.
Yeah. And it not only needs money, it also needs founders and startups. You have said this fund is all about to secure rollout and use of AI in real business operations. So what exactly are you looking for in a pitch?
I wouldn't even stress about AI because you have stressed it and it's clear. I wouldn't stress it because a startup founder team which comes to us and has no clear picture of how they want to use AI, what they want to use with AI. I mean, the discussion with us wouldn't last long. It's a sizable fund and I'm really proud of it. 90 million is a lot, particularly if you go for pre-seed and seed. However, in the overall pictures, of course, it's only a little. And I have no illusion that Europe or we can really compete on that level with billions of dollars in large LLMs with Anthropic or OpenAI or whatever. However, we need to work in the world we live in, and Europe has strengths, and what we are looking for is that the founders have a clear picture what they want to do, that they can build something which is not a thin wrapper around some LLM they're going to use, but rather a possibility to not only grow fast and have customer relations, but also to develop some sort of mode, some sort of extra, which enables them in the long run to have a sustainable business for the next couple of years, so that they don't get swept away by the big guys. If I may continue, there's one way we did investing in the last 12, 18 months, was that we invested much more in companies which work a lot with manufacturing or industry 4.0. I mean, we did this in the last 10 years already as well. There were always some investments which with a focus on these areas, but they were just a couple. And now we did among the last 12, 14 investments, we had half of them in this area. And why? Because we see the Mittelstand, for example, or the corporates who have their machines, who have the manufacturing halls, who do this. The landscape of what's there is really fragmented. So this is not the first thing a ChatGPT product will look at. They don't want to give their data out to US or to China. So German or European-based companies who do this, who work on our manufacturing base and get the data, get the experience, speak the language of the people who have to oversee manufacturing plants and so on. That's something unique, and that has a sustainable value, in my opinion, for the next years, for the next decade. So this was one of the reasons we did a couple of investments in that area.
Yeah, you already mentioned a few topics, not only AI. Is it about deep tech, tools, governance layers, or all of that?
Honestly, to all of that. The only thing which is difficult for us to do, or love to do it, is basically the foundational models. What we really do is we have also investments in, I would say, organizational layers. We have an investment in company which oversees the risk exposure companies have while using AI in the fintech sector. That's called Kelvin Risk. There is a company called Org, which helps companies basically oversee and manage the different agents or LLMs they're using. So this is one part, obviously, but the other part is simply using AI in a way that it's still value creating for the startup and value creating for the customer, and you see a long way that it stays that way. I mean, we all have read. Now it's like middle of February. It was 2026. We have all read articles about the latest release of, I think it was Anthropic, Claude, and what that made happen to legal tech companies and others. So we know that. I think it was a little bit overdone, but it's a sign. Yeah.
Yeah. At Seed and Speed, you not only have the money and invest in companies, so Seed and Speed also has a strong go-to-market support. So it's sales coaching, it's PR, it's recruiting. So why is that so critical at the pre-seed stage, for example?
It's very critical because, I mean, of course, we love to work with serial founders and we love to work with them. And the great thing for our fund, for example, is that founders who became millionaires basically because they exited in our fund 1 or 2, invested in our fund 3. So this is awesome. And when these founders either become investors themselves or they maybe build a new company, we're always keen to invest with them because we know them. They have done it before, they know it. But most founders obviously do it for the first time. It's a long journey, and they have some speciality in things I don't know anything about. Maybe a special part of an industry, which I really need to learn when we make a due diligence on a startup. And I learn a lot about a certain industry, about a certain product and service. So, as an investor, you cannot be of help. But where we really can help, we have a dedicated team of people who do really sales support and communication support, because that's the same with every startup. They have the same questions. How do I organize my sales teams? Which kind of people do I use? What do I pay them? What's the difference between like a fixed income and the boni and stuff and the margins? They are and how do I structure a good sales call? Things always the same. And we have very experienced people in a dedicated sales consulting team, I should say, who help these startups. And the startups don't need to pay for this, because we believe that the team pays for itself, because it helps the startups to create value, sustainable value, and they grow faster. And so we offer this team to the founders. They go there for like a couple of days per month, help them to build it up.
Yeah.
Because when we invest, there's no sales team. There's maybe one or two founders who do sales, maybe an intern, but it's very founder-led. It's really playing it by the ear, figuring out the product, right? Figuring out the service. The MVP is there, and our task as a pre-seed or seed investor, in my opinion, is to help the founders to get ready for Series A for repeatable processes, and building an MVP. That's what we expect. But then having a sales process, having 1 year, 2 years time to establish a sales process, to show KPIs, to be able to do Series A, that's our part. We're very actively helping our startups founders to do this.
Yeah, and we at Founders Today, we talk a lot to startups for sure as well, and we also see that founders are focusing only on building the product in coding, and they have no knowledge about PR and sales, especially when they do not have a co-founder who is in sales, for example, right? With all these services and with all the great support, you definitely already saw a lot of mistakes. What's the most common mistake you see in early stage startups?
In the beginning, they want to found a company. They talk about what they want to do. They do customer interviews, and they figure out a product and they build it. Very often I really see an absence of personal reflection, of reflecting where you are, what you need to do, because it's so busy. You work 12 hours a day. And to take the moment to stand still, look back, look forward. Where am I? Where's my team? Where's my product? Where I want to go? To have the right processes. That's one of the most dangerous situations I watch founders to go in, because everybody is really busy and they are all incentivized and they are all motivated. So this is usually not an issue. This is clear. The question is, do you take enough time to understand where you are, what you need, and how do you reliably build it? And that's, in my opinion, one of the reasons a good investment professional, as a shareholder on the board, can help the founder to be a mirror, to be sort of a mentor sometimes, but at least to be a mirror, to resonate, to make sure that you sit down. Okay, we have planned this. Have you achieved this? If not, why not? Can we clearly see where? And this honesty, we all know it's not always easy to be honest to yourself, and sometimes you don't even see it because you are blinded a little bit. And so reflecting on where you are, taking the time, this is one of the mistakes which sometimes do not happen enough. And there I see a big task for a VC.
Yeah. And yeah, they also have a lot of learnings, right? Because sometimes it goes really fast. So building the product, and then in a few months later, they have a funding round, and they have no structure in the company, no structure for scaling and all the stuff. So yeah, we also see that a lot in startups, especially when they are very, very early stage. Yeah. Yeah, the new fund is your first to go beyond Germany, Austria, and Switzerland.
Yes.
So what markets are you excited about right now?
I mean, it's the first. So we had several investment in Austria and Switzerland. and maybe the odd one out in the UK or so. But now we are actively looking at other regions. You're right. And we will, like, two reasons. One reason is we try to be careful to conquer new markets. We are still a small team, and we want to do things right. So the first market we're gonna look at, or we have actively investing already, is the Benelux. So we have two investments in the Netherlands and Amsterdam, and that means also we meet angels there, we meet founders there, we meet Dutch or Luxembourg or Belgian VCs, or VCs who are active in that region. So we like to invest together with other venture capital funds if possible. I mean, not with several, but at least with one or two in a round. And we always try to go to these markets together with the VC we know already. So we have made investments. We know how serious they are. We know how they work, whether they're trustworthy, whether our values connect. So Benelux is one thing that we've already made two investments, and the other will be also the Nordics. I mean, if you look at both regions, relatively from a German or French perspective, relatively small countries.
Yeah.
So a different spirit in a way. I sensed it, so that people know, okay, I can grow in Sweden or Denmark or Norway, but of course I need to look at the rest of Europe, at the rest of the world.
Sure.
So this is sometimes with French or German founders, because we have such big markets, it's a little bit different sometimes. So these are two regions we are investing actively now. And if you ask for the plans for the next 1 or 2 years, I'm pretty sure we look to the east, to Poland, a very prosperous country, also very good founders, and this is probably going to be the target for the next 12, 18 months.
Yeah, especially the Nordics. What I hear, they have a very fast growing ecosystem. I can imagine very, very interesting talent and also very interesting startups, what they have.
Absolutely. They are well connected. They have a more international approach than we Germans sometimes. They speak English as a second language, almost as a mother tongue. They look at other countries. They have experience, international experience. So very interesting founder scene, yes.
Yeah, you mentioned the global startup ecosystem. So I can imagine what you are looking for in startups is also that they can scale on a global base, right? So how do you actually help founders break out of local ecosystems and think globally?
I mean, one thing is we discuss the strategy and also the fundraising strategy with the founders. So when we invest, usually the first targets, mostly, not always, are on European side. But when you say, okay, now we do a Series A, and with serious Series A money, we're going to the US, for example. We really, that's one of our jobs, to be really well connected to later stage VCs from our pre-seed seed perspective, so Series A and above. And we try to connect the founders with them so that they have an investor on board who has connections in the market they want to go, usually or very often the US. That's something we do. We work together we have a sister fund in the US, MG Ventures, based in San Francisco, where we also try to make connections and help. So it's basically a lot of strategy, I would think, because there's obviously a question: when do you do it? How much money do you really need to go over the big pond to the US? And usually, thankfully, founders are very ambitious and want to do it very fast. And it's a big market. You need to really grow. Maybe a venture capital fund, a small German success of a company, of a startup, doesn't help us. We need big successes in the end, even though we need venture capital return. So that means the founders as well. So I'm happy that they're ambitious. Sometimes it's a question, maybe wait a year, maybe wait for the Series A, maybe wait for the time that you have structures in Europe, because from I can see from the things I saw with startups, it's very often the case that you need one of the founders to go over and stay there for at least for a while, for a year or something. And then better people, just hiring a salesperson and having established some sort of US Inc. It doesn't really help you to get success. Usually you need one person of the founder team, in my opinion, ideally there for a long time, build up a team. And then in the end, you can, of course, have a CEO, a manager there. But for the first 1 or 2 years, I mostly see that some original founders need to look at these big markets themselves. And for that, you need a lot of money. The wages are different there. The rents are different. Everything is higher and competition is hard. So it's a lot of reflecting strategies with the founders, I would say, is our job.
And also you need a really good preparation for that, as you already mentioned. Alexander, you have already baked startups like Orc AI, Rico, Optimus, 11 Dynamics, great successful companies, big companies already. What patterns are you seeing emerge across these deals?
The patterns I see much more than before. There's rarely a team which is, in my opinion, investable where there isn't one strong tech person. In the years before, like 10 years ago, you could say, okay, 2 people come from business school, have a great idea, are good in execution and managing, and maybe they build something, good processes, have a nice market, and they hire a CTO and it works. And right now, I see it's much harder. These are typically not the teams we invest in. I want to say, I say never, because I really like to get, if a founder hears this and they say, okay, maybe I don't send C to speed down my pitch deck because they don't, well, send it to us. It's always good to have a conversation maybe and to understand. But in general, I have to say the changes caused by AI are so fast right now, and you need to be able to also understand them on the information technology level, or at least follow them. You need not to think ahead because it's really hardly possible. You can have theories, obviously, but it's hard to predict the future right now, in my opinion, except for the general assumption that AI will take more and more space in our lives. But so you need, in my opinion, you need a strong tech person, not only for your first MVP product, but also for the understanding the technological implications of the things happening around us, mostly in the valley and so on. So that's one thing which combines them, and you need to basically embrace AI. If you are cautious about it, and if you don't use it in your life, it's difficult to get a feel for what happens. So you need to embrace it, and you need to work with it, and then you find a way of using it. So these are the 2 things which come into my mind, obviously.
And are you starting to see a blueprint for early AI winners, or is it still too early?
In my opinion, it's too early. So I'm still in search mode completely. I look at everything. I listen to podcasts and video interviews like yours, and I try to gather as much information as I can. I have learned that it's also okay to say you don't know. In this case, I have to say I don't know. I'm still in the learning phase, and I consume content as much as I can in order to develop. Like as a VC, you need to, like as a founder, you need to develop some sort of scenarios for the future, for the next 2, 5, 10 years. Because we need to invest on the long term, and the companies need to be sustainable for a long time in order to exit. Otherwise, otherwise we have a problem. So no, for me it's too early. It's I'm more, one of the most important things as a venture capital investor you need to be is, in my opinion, you need to be curious and willing to learn, and also willing to change your opinions. So that's important. So if you see you're wrong, the world develops in a different way. It's a good reason to read, watch, and listen a lot, and then find out what the theory is. So I'm in learning mode right now.
And in my opinion, European investors have maybe a little bit more risky in the future, because when you have a look to the US, they are, in my opinion, a little bit more riskier than especially Europeans. I mean, for example, here in Austria, we saw a investment drop from over 60%, right? That's a lot, and startups don't get money from investors, and because they don't want to be so risky, right? Especially in the pre-seed and very early stage phase in the startups.
That is true. That is a pity to hear, but I mean, money isn't as cheap anymore as it was like 5 years ago. So obviously that happens. On the other hand, and I don't know whether it's the same in Austria, but at least in Germany, and I would say in Switzerland as well. But let's say maybe in the Netherlands as well. This is my experience. The network of angel investors, which are basically very often before our pre-seed round or seed round, this has gotten stronger. There are much more people who understand that investing in startups can be interesting, who want to do it either to earn money and or to do something worthwhile with their time and their money to help to build something. Very often I see, it's funny that you ask, but I see both motivations are really strong, right? So making money is one thing, but the other thing which I really see is helping to get something started. Usually the men and women are mostly a little bit older, so because they have made some money in their life and they do something. So, and these people are around much more better organized, better connected to founders. So this is something which gives me a lot of hope, even though if the numbers in Austria are not so good right now. But I've never seen such a vibrant, well organized, and also wealthy business angel scene.
Yeah, perfect. Thanks so far for all the great insights. Now, Alexander, we are coming to the fastest part of this podcast. It's called the Exit or Die Rapid Fire. It's very easy, a quick round, 5 questions, what I prepared for you, and 1 sentence answers only, please.
Okay, 1 sentence. Okay, this can only go wrong, but okay. No.
Okay, perfect.
Yeah.
Are you ready?
I'm ready.
Yeah, perfect. Okay, my first question is the most overused word in early stage AI decks.
Oh God. I would say it's the same word which is overused in all the decks. It's market size and the magic words like tam, sum, and so on.
Yeah. Number 2, the underrated city for building a European AI company.
It's I'm German, but I'm not going to be too patriotic. From what I have seen, actually, from what I've heard, and from the people I talk to, I would say Amsterdam.
My third question is best founder trait you look for immediately.
Openness. I want to see people who are open about what they want to do, open about what they don't know, open about what they know, and only then you can have a first conversation on an eye level from person to person.
My fourth question is the red flag in the first 60 seconds of a pitch.
Usually it's founders who have not thought the pitch through and who lose the listeners in the first seconds because they don't understand how to make what they are planning to do interesting for a person who listens to them.
What would you build if you had to be a founder again tomorrow?
If I were a young PhD student in software engineering, I probably would give you a different answer. For myself, as more like a business person, I would indeed think about everything which helps to use AI tools in the companies, which is sort of a governing layer, a managing layer for this, because it's more like on the shovel side, you see, when you're dig for gold. So something like this, I would try to find out this, because it's also a little bit future proof, or hopefully future proof, regarding all the fast developments which come over from the US or from other places. So as a business person, this is something I would do.
Perfect. Great. Alexander, if you could give one piece of advice to every founder building an AI startup, or let me say a startup in Europe today, what would it be?
My business is saying no a lot. I mean, from 99 or so startups, I say no, and only one I say yes, maybe, or even the numbers are even higher. So my advice would be, don't be set back by a no. This is the same for a founder who have to talk to 100 VCs and then hopefully has 2 or 3. So resilience is key in my opinion. Don't take anything personal and just basically follow through with what you want to do. This is my most important advice.
Yeah, perfect. Never give up. I would say
that's the short version of it. Yes.
Yeah. Especially in hard times as we live right now. Alexander, thank you so much. Unfortunately, that's it for this episode of Exeter Die. Again, huge thanks to you for not just writing early checks, but also helping define what early stage AI investing in Europe should look like. My last message to all of the guys in front of their notebooks is whether you are building with agents, LLMs, data layers, or infrastructure, if your product doesn't scale early, it may not scale at all. Alexander, thank you so much. Please give us your last message to all the founders outside there.
Thank you very much for the invitation. I'm happy to be part of it. I'm also very often very happy to be on the listening side of it. And my advice is basically look for, if you can choose between VCs, look for the ones who you really vibe with. Because you're going to be with them for 5-10 years at least, and you need to be able to work with them. So valuation is of course important in other terms maybe, but look for people and funds whose DNA of what they do and how they do it goes well with yours. And this is a great recipe for a long journey, which hopefully has a good end at the end.
Perfect. Thank you so much, and see you soon to you guys. Bye-bye.